If you've been paying any attention to the U.S. economy, you know the one story that's just dominating everything.
Oh, absolutely.
The incredible surge of investment, all driven by the promise of artificial intelligence.
It's this economic miracle, right?
Yeah.
All powered by the Magnificent Seven.
Exactly, these tech giants pouring hundreds of billions into data centers, and their valuations are just, they're in the stratosphere.
And it's all built on this one really compelling story that AGI, artificial general intelligence, so, human-level intelligence, isn't just coming, it's right around the corner.
And that it will unleash productivity like we've never, ever seen. But the sources we're diving into today, well, they force us to ask a really tough question. Is this a real boom based on real tech breakthroughs?
Well,
Or are we watching a giant bubble, one fueled by what the industry itself calls hallucinations?
so that's a reality check. A working paper from this September makes three really pointed claims that just fly in the face of that narrative.
Oh.
First, that we've hit a wall. Peak Gen AI. Simply making these models bigger isn't going to get us to AGI. Second, that the industry is in a massive speculative bubble about to burst.
And third,
And third, that the huge geopolitical bet the U.S. is making on AGI is failing.
okay, let's unpack this, because to really get the risk here, we have to start with the hype, the sheer level of it.
The optimism was just breathtaking.
It was more than optimism. Industry leaders talked about AGI with, absolute certainty.
Exactly. I mean, think about Sam Altman from OpenAI.
Yeah.
Back in January, he claimed, and I'm quoting here, "We're now confident we know how to build AGI."
That's not a guess, that's a statement of fact.
It is. And you had others echoing it. Microsoft, back in 2023, said GPT-4 showed sparks of AGI.
And then there was Eric Schmidt, former Google CEO,
Okay.
saying in April that the AI revolution was actually underhyped and that AGI was coming in 3 to 5 years.
It felt like we were just waiting for the switch to be flicked. Elon Musk even said his system, Grok, would be smarter than the smartest human being by 2025 or 2026.
And the market just drank it all in, believed it would change everything overnight. But then the new models actually came out. And instead of this huge leap forward, we got these kind of underwhelming incremental updates.
We were promised AGI, and we got ChatGPT-5, which the sources basically call a dud.
Right, and the disillusionment was fast because the failures were so obvious.
They really were. You have these supposedly super intelligent models failing, like basic high school quiz questions.
Yeah.
GPT-5 couldn't put Oregon in the right place on a map.
Or list the first 12 American presidents.
Yeah, simple stuff.
And what's really crucial for you to understand is that the core problem, the hallucination issue.
Where it just makes things up.
Exactly. It didn't just stick around, it actually got worse as the models got bigger and more complex.
And that is the huge warning sign. Internal tests showed GPT-5 was just plain wrong in almost 1 out of every 2 answers if it couldn't browse the web.
1 out of 2.
And even with web access to check its facts, it was still wrong about 10% of the time.
And the misinformation risk. I mean, the sources on this are shocking. Chatbots are now spreading false claims on controversial topics 35% of the time.
Which is almost double what it was a year ago.
So the system got more confident, but less reliable.
Which hits the corporate bottom line immediately. So you have to ask, if the tech is failing, are companies actually getting the productivity gains to justify these valuations?
And the answer seems to be a very loud no. The rate of failure for enterprise adoption is it's stunning. An MIT study found 95% of Gen AI pilot projects in companies are failing to actually raise revenue.
95%, that's a staggering figure.
Yeah.
And the reason is that these generic models, they don't learn from or adapt to workflows.
So they can write a decent email, maybe summarize something.
Right, but they can't do the complex, specialized tasks that actually make a company money.
Which brings us back to people. You might remember the firm Klarna. They made a big deal about laying off 700 workers because of AI.
I do? Yeah.
Well, they had to rehire them all as gig workers, but still, the automation just didn't work.
And it wasn't just them. IBM, Commonwealth Bank. They also had to bring people back.
And if you zoom out, Census Bureau data shows AI adoption is actually declining in big companies.
The hype just isn't matching the reality on the ground.
Look at coding. The prediction was that AI would write 90% of all code within 6 months.
Which never happened.
Not even close. One study found programmers using these AI tools were actually 19% slower.
Slower.
Yeah, because they had to spend all their time checking and fixing the AI's code. The human oversight just erased any efficiency gains.
So, okay, if just throwing more data and more processing power at the problem isn't working, we have to ask why. Why are they hitting this wall?
And this is where we get to the core kind of philosophical problem. It's not about computing power, it's a design flaw.
Precisely. These large language models, LLMs, they aren't built to understand the world. They're built for pattern matching. Basically, super sophisticated autocomplete.
They're what the source material calls stochastic parrots.
Exactly. They just predict the next most probable word in a sentence. There's no comprehension, no reasoning. It's all just statistics.
Which brings us to Noam Chomsky's critique, right? He argued the human mind tries to create explanations, to understand what is, what isn't, what could be.
Whereas LLMs are just lumbering statistical engines.
Yeah.
They're incredible mimics, but they can't actually think.
And we can see this weakness in some pretty stunning experiments. Apple published a paper, The Illusion of Thinking, where they tested the biggest LLMs on the Tower of Hanoi puzzle.
A pretty simple logic puzzle for a human.
Right, and the crazy thing is, they didn't even ask the AIs to solve it. They just gave them the step-by-step solution algorithm and asked them to follow the instructions.
And they couldn't. They failed. They just can't execute a multi-step, rule-based task if it's not something they can copy from their training data.
And it's the same thing with a study from MIT and Harvard. They trained these models on all of physics, everything we know.
And what happened?
They couldn't derive Newton's law of gravity. They could predict where a planet might be next in its orbit, sort of a Kepler-style approach of just fitting the data.
But they couldn't explain the underlying principle, the why.
Exactly. Prediction without explanation isn't reasoning. And if you can't reason, you can't get to AGI. It's that simple.
Which is why the term hallucination is so misleading. It anthropomorphizes the machine. It suggests it has a mind that's just, a little confused.
Yeah, and this goes way back. Joseph Weizenbaum, who created the very first chatbot, Eliza, warned about this in 1976.
What did he say?
He called it the reckless anthropomorphization of the computer, and he warned it leads to delusional thinking.
And here we are, seeing the exact same thing, just with a few $1 trillion poured on top.
It's this dangerous loop. The tech fails, but it's framed as a temporary bug, which just reinforces the idea that a breakthrough is one step away.
And the research shows that the people most drawn to this AGI story are often the ones who understand the tech the least.
Which brings us straight to the money. If the tech is this flawed, why are financial markets acting like none of this is true?
That is the $1 trillion question.
Okay, here's where it gets really interesting, because the amount of money being spent, it just defies all the technical evidence. The capital expenditure is like nothing we've ever seen.
The Magnificent Seven spent over $100 billion on data centers in Q2 2025. 1/4.
And they're planning to spend a cumulative $3 trillion on data centers between 2026 and 2029.
$3 trillion. I mean, that's the kind of money you use to build a national highway system or electrify a country.
To put that in context for you, the sources point out that data center investment added as much to U.S. GDP growth in the first half of 2025 as all consumer spending combined.
Let that sink in. The AI build-out is literally propping up the economy, whether the tech works or not.
And you see it in the stock market. The Magnificent Seven's share prices went up 156% between 2023 and 2024.
While the other 493 companies in the S&P 500 went up, what was it?
Just 25%. It's an incredibly concentrated boom.
And when you look at the price-to-earnings ratios, the numbers just scream bubble.
NVIDIA's market cap went past $4 trillion. Its PE ratio peaked at 234.
234.
Even after it came down, it was still at 47.6 in September. Historically, that is incredibly high.
It means investors are betting on decades of perfect exponential growth. Growth that, as we just discussed, the evidence says is not coming.
Then you have Tesla with a PE of over 200, even with falling EV sales and, well, no robo-taxis.
Right.
This is why financial experts are sounding the alarm. Torsten Sleck at Apollo Global warned that AI stocks today are even more overvalued than .com stocks were in 1999.
That's a deafening historical echo. And all this spending is happening while the companies are losing billions. OpenAI has never turned a profit.
It lost $8 billion in 2025. It's projected to lose $28 billion more over the next 3 years.
The entire industry is floating on investment capital, chasing a future that might not exist.
And that leads to these incredibly risky deals, like the Oracle one. They have a $300 billion deal to build cloud infrastructure for OpenAI.
So Oracle is building all this stuff before they get paid, betting that OpenAI will somehow magically become profitable enough to afford it.
Yeah, and the risk goes even deeper. NVIDIA is essentially propping up these smaller, loss-making cloud companies. It's buying back their unsold cloud capacity for its own research.
So it's creating artificial demand to keep the whole ecosystem looking healthy.
Exactly. And you have to remember, these assets aren't like railroads that last for 50 years.
Right.
AI data centers, the servers, the networking gear, it all depreciates in 3 to 5 years. If this boom ends, that multi-trillion-dollar investment loses its value almost overnight.
So the consequences of chasing this AGI fantasy, they go way beyond just the financial markets. They hit the real world. Hard.
Absolutely. Let's talk about the environmental cost because it's massive. AI data centers use 10 to 20 times more electricity per server than a normal cloud computing center.
And the U.S. Department of Energy now expects data centers to use up to 12% of all U.S. electricity by 2028.
12%. For you, that's like adding millions of new homes to the grid, all to power tech that's failing 95% of the time in business.
And it's not just energy, it's water.
Right. To generate a single 100-word email on ChatGPT uses about 1.5 liters of water.
And where are they building these data centers?
2/3 of the new ones since 2022 are in areas with high water stress, places that are already running out of water.
And all this waste, all this spending is being justified by geopolitics. There's this bipartisan agreement in the U.S. that we have to beat China in the AI race.
The strategy is basically get to AGI first, use America's chokehold on advanced chips to win, and secure economic and military dominance forever.
But the sources we're looking at suggest this is a huge strategic blunder because China isn't betting the farm on Gen AI.
No, they're taking what they call a small data, big task approach. They're focused on practical existing tech.
Things like renewable energy, electric vehicles, battery storage.
Exactly. China is dominating the real-world manufacturing sectors of today while the U.S. is distracted, chasing a hypothetical AGI of tomorrow.
And the irony is that even the people who push the hype the hardest are starting to sound the alarm.
Eric Schmidt, who said AI was underhyped, co-wrote an article warning that Silicon Valley's obsession with AGI is actually a risk.
Because it lets China pull ahead in everything else.
Exactly.
So after all that, what does this all mean for you?
I think the core insight is this. The massive spending that's driving the whole U.S. economy right now is based on a promise, an AGI breakthrough, that the technical experts say is impossible with the current approach.
You have a fundamental failure to reason, a 95% failure rate in business, and a financial market that's more stretched than the dot-com bubble.
The entire economic boom is built on a technical hallucination. It's the belief that a statistical parrot will suddenly wake up and start to think.
And that disconnect between the financial reality and the technical reality,
Yeah.
well, that's the ultimate delusion.
And if you want the perfect example of just how deep that delusion runs, look no further than Sam Altman. To justify the insane, unending need for more power and more computers,
What did he suggest?
he mused publicly about putting data centers in space, or building a Dyson sphere around the sun to harvest its power directly.
That's the level of fantasy you need to justify this. It's not just a question of whether the bubble will burst, but how much damage we'll do to the real world while we keep chasing a $4 trillion ghost.